Welcome everyone to Crexi Land. Thanks for joining us on the Pro Perspective, a weekly series on a variety of commercial real estate subjects. I'm your guest host today, Eli Randel. I hope everyone out there is staying safe and sane. If you're like me, you're probably tired of seeing the inside of your home, but hopefully we're turning the corner soon and can get back to this great industry we're in. Today's episode is called Money Matters. We'll be talking with the capital side of the business, and I'm honored to be joined by two guests, Ben Jacobson and Kevin Miller. Thanks for joining us. How are you both today?
Good. Thanks for having us.
Doing well. Thanks, Eli.
Yeah, thank you both. I'll make some quick intros. Our first guest, Ben Jacobson. I've known Ben for about 6 years. He and I worked together for a subsidiary of Guggenheim Partners in the equity practice group, and we were raising LP equity and corresponding debt for real estate developers in the Southeast. Ben then went on to Trez Foreman Capital, which is now just Trez Capital. And over the last couple years, during this last development cycle, has quickly become one of the most active development lenders in the country. Ben, how are you?
I'm good, thank you.
Did I get the intro correctly? Did I mispronounce anything? Anything you'd like to add?
No. You're right. I work for Trez Capital, Canadian private debt fund, and I think you got it, really well.
Cool. Well, I was debating whether I should mention you're an avid Benjamin Franklin collector, but the view of your office is too good to resist, so I think I will mention it. Any quick fun facts you want to point out there?
They're all fun. But Ben Franklin's great, and I'm glad I can share the view with all the Crexi attendees.
Great. Thanks. Second guest, Kevin Miller. I've known Kevin for about a year, but I've been watching him much longer. First noticed Thoroughfare Capital sprout up in about 2011, prior to the bridge boom. Kevin was really early to this game. I've since seen him build an amazing business, diversified, not just bridge capital, multiple capital buckets. Kevin began his career at Arthur Gallagher, and like most of his fellow alumni, is a ferociously proud USC Trojan. Kevin, how you doing today?
I'm doing well. Thanks, Eli.
Anything I missed in my intro? Anything you'd like to add?
USC was joined as well. No, I just wish my alma mater was doing as well as we are.
Yeah. Well, I'm sure things will turn around at some point. Last on the screen, you'll see Paul Cohen. Paul's from across the pond, Britain, but he's been on the U.S. soil for about 25 years. Nobody's perfect. I've known Paul for about 14 years. He wore the fake glasses I was considering wearing. We're now working together for the third time, and Paul's also a close friend. Paul, how you doing today?
I'm doing pretty good, Eli. I'm doing very well. Excited to be on this with you. I've seen you recently, so this is a good opportunity to catch up.
Well, and a little fun fact for Paul, I will steal his joke, but credit him. He's working from a WeWork right now. He's one of the few brave souls, and he's renamed it iWork, which I thought was pretty good.
But I'm here all day. By the way, I'm not just here for the good looks. I'll be monitoring the Q&A. So if you have questions, down in the bottom there, you'll see a little pop up, and it will say Q&A. Put your questions in. I'll be monitoring, and I will inject those questions into this lively debate as we move through it. So thanks for the intro, Eli.
Yeah, thank you, Paul. Appreciate the hand. So let's kick it off. Ben, Kevin, thank you both for being here. How are you today?
Couldn't be better, other than people dying.
Well, that's never a good thing, but, does happen, I think. So, Ben, you're essentially based in the great city of Miami. Kevin, you're based in LA, another great city. I'll start with the West Coast. Kevin, what's the climate like out there? How's the market, both from a commercial real estate perspective, but just a general perspective? Are people staying safe? Is it calm? What are you seeing out there?
Well, we're on lockdown through May 15th at this point, at a minimum, unless, Trump trumps Gavin Newsom. We're not going to know that for a little bit, though. Maybe we'll find out this week. From the CRE perspective, we're going through some price discovery, but, we're actively apping deals.
Great. And I'll certainly get into some of those questions. Ben, I know you probably resent me saying you're in Miami because you're in Palm Beach County, but I know you lived in Miami a long time. South Florida, what is the climate like there? People staying safe? What's the general mood and sentiment?
We too are on lockdown. I feel like we were a little slower to get there, especially in Miami. People don't take this seriously, or at least they didn't seem to take this seriously up until recently, but now everyone seems to be conforming more or less.
Okay, good. Good to hear. Well, while I have you, I'm going to start with you on the next non-real estate question before we really kick it off. Married with a kid, another on the way. Any tips you can share for staying sane and productive while working at home? Asking for a friend.
Send them on walks around the block.
Really good for you. I appreciate the dead air, but my wife would not, just let me send her around the block. But Kevin, what about you? How's working from home been? Any tips, any things you've learned along the way?
I've been heating the pool non-stop for the kids. I built a drink set, and that's keeping them out of my hair a little bit. Good.
Well, that's a good tip. You cut out a little bit, but it sounds like you're keeping everyone busy, and that's always a good move. So jumping into the real estate stuff, Ben, your company specializes in development financing. That can mean horizontal loans for acquisition and site work, or it can mean vertical construction loans. Given the climate, given that nobody's probably developing at the current moment, they may be planning to do so. Is your company still open for business? Are you underwriting deals, and are you lending?
So we're open for business. We are not making new loans at this time. We are taking a pause as we kind of watch what happens in the market. We're changing, it seems like, every other day. We're monitoring our portfolio very closely to make sure we can assist borrowers as issues come up. In the beginning, everyone was concerned on the construction side about supply and materials coming from China. Also, a lot of materials come from Italy. And we were just kind of gearing up to make sure that our borrowers had alternative suppliers. Thankfully, it wasn't such an issue. And the delays we've seen, at least on the supply side of construction side, have been fairly minimal. Now the concern is labor. And even though construction is deemed an essential service, a lot of people are still making sure that people that are on the job need to maintain a social distance. So it's been something that we've been making sure our borrowers are implementing on all their jobs so they can continue to work.
So it sounds like there's been a mandated pause of sorts. And just a quick question, if you saw a sweetheart deal from a sponsor, would that pause be lifted, or is it a firm one?
I don't think that we would lift the pause for the moment, only because our first and foremost job is to act as a fiduciary to our investors. And with things continuing to shut down, layoffs continuing to happen, I just heard today that a couple of hotels in Miami continue to lay off a couple hundred employees. We really just want to take the wait and see approach.
Got it. Makes sense. Kevin, obviously, same question to you. I know your firm has got several capital buckets, some of which are really primed for opportunistic cycles and distress. Not that any has yet to churn through the system, but many forecast it will. Are you up and running and lending at the moment?
Yes, we are, and we've been able to raise capital more quickly than we have in a couple of years, just due to the ability to deploy faster. But unlike Trey Foreman, we're really focused on deals that are already built or have a value add component. So near term cash flow in sight. But the only things that we're currently putting on pause are retail and hospitality.
Got it. Obvious reasons around that. Any new trends other than once favorable property types you guys are pausing on? Anything new you're seeing, or certain deal types emerging, or appetite from investors?
Yeah, investor appetite is at an all-time high. I'm being joined by my 3-year-old right now, who obviously missed the jungle gym and whatnot outside. But we're at a Margot, say hi, everyone.
Hey, there we go. She's a young, hopefully not Leona Helmsley in the making, but a young
investor appetite's
great. Well,
we're seeing more deal flow than I've ever seen in my entire career, though.
Cool. Well, that's a first for my very young radio career.
Yeah, one question came in, if I could just jump in there. Self-storage. How do you think the coronavirus will affect the storage business?
Self-storage has fared, pretty well throughout downturns in the past. Talking with storage operators, we've seen pretty high collections compared to other asset classes, at least so far. But you're also talking about an asset class where in certain submarkets, it's been way overbuilt, such as student housing as in a submarket like College Station. So you got to pick your spots.
Right. Okay.
Got it. Great. Well, thank you for that. So touched on some of these questions. Kevin, I'm going to stick with you. I think a question on everyone's mind, and we probably all have our own predictions, is interest rates. Obviously, for many reasons, they could or should be at a low right now. Perhaps spreads are widening in some ways. So, I'll leave it to you to determine that. But, also perhaps give us some insight as to where you think they're going near term, and then maybe a little further out.
So it wouldn't surprise me if rate indices continue to hover at all-time lows. They were at lows during the last recession, but I believe the effective cost of capital will continue to go up due to the supply of liquidity and players willing to extend credit having been constricted. So you have similar demand. Debt funds were responsible for a little over 40% of the CRE finance market last year. And I don't know, I'd say maybe 90% of the competitive subset is either frozen on the sidelines or going out of business.
Okay. Ben, same question to you.
Short answer is I see effective rates going up even if indices stay low.
I agree with Kevin, Eli. I think effective rates will end up going up. Indices are definitely low. We've been hearing from a lot of banks as well that have either kept spread, but by and large have been increasing their spreads. And I think that trend will continue also into the debt fund private lending spaces. There's going to be more capital and people are just going to be hunting for yield, and it's going to keep rates higher.
Got it. Understood. Thank you. So question I would love to hear the answer to, and we're going to be sure to leave plenty of time at the end for audience questions, but I know both you're both capital providers first and foremost, but you're both entrepreneurial, and my guess is invest in deals from time to time. Given your unique perspective to the industry, what deals and markets interest you at the moment? Where do you think the opportunity is? I'll start with you, Ben.
I think first and foremost will probably be workforce housing. or some lower end type of housing. You know, the single family for rent model has been pretty attractive over the past 12 to 18 months. I think that'll continue to be attractive. And I think, again, workforce housing, either, you know, government sponsored or just general, like, private, will be really active. Depending on how, I think the longer this pandemic or whatever we're in lasts, the more valuable it'll become.
Great. Kevin, you know, if you had some entrepreneurial capital to throw around and, you know, we're chasing deals of your own, what piques your interest right now? What property types and what markets?
Multifamily, industrial, data centers, student housing if it's in the right market. Probably not be investing in the equity in office. But I do like, you know, the aforementioned, you know, yachts. As far as markets, I'm kind of ambivalent. It all depends upon, you know, economic drivers within a particular submarket and, you know, supply.
Got it. Great. So question I think is a really important one, maybe on some people's minds. You know, there's been a lot of relief programs and government intervention, and that may continue. There's been some borrowers, tenants who have stopped paying rent, some who are forced to, and some who are not. So my question to both of you, and I'll ask you first, Ben. First off, do you service your own loans? And then if so, and you have a borrower who's potentially facing hardships, how would you suggest they approach that with you? What's the best way to navigate that with your lender right now?
Sure. So one, we service all of our own loans in-house here in Florida. You know, like we had said before, the majority of our loans are construction. So they're really not, you know, it's not like they can't pay just because we have interest reserves. You know, the very few loans that, you know, are existing assets, like, you know, an office building or something like that, they've been paying. We've been having conversations with them, and, you know, my advice would be just, you know, be open and transparent with your lender. Everyone wants to work together through this. You know, no one, I think, wants to be difficult in light of a pandemic. So my suggestion would be just be overly transparent with your lender or other partners.
So I'll ask you a trick question you may not want to answer, but, you know, that's why they pay me the medium bucks. If a borrower thinks they need to work with you, and they continue paying, you guys are going to hear that call and maybe work with them. But, you know, for all you're concerned, they're still paying their loan. Do you ever recommend they default just to give the conversation a little bit of a different tone?
I would never recommend the default. I would never recommend the default.
Well, you heard it here first. Kevin, I'm going to ask
Ben,
you the
can I
same
ask you a question? Yeah, and I'd love to go into that, but maybe can I ask Ben a question real quick?
Yeah, of course, please.
So Ben, are you worried about the deals in your pipeline and those being absorbed in supply if the economy constricts, given the fact that, you know, a lot of them are land, you know, whether it's horizontal and partially improved or, you know, partially built construction projects? I mean, once those reserves run out, especially if, you know, time to complete takes longer, how does that come into your guys' thinking portfolio-wise?
You know, it's a good question. It's one that we talk about every day. We're actively monitoring that. I think there's definitely a concern as to what market they'll be delivering in. We had a project deliver at the beginning of March, you know, a multifamily rental project. Leasing is slower, but what we've been helping our borrowers do, and a lot of them have been doing this, you know, on their own, is transition to, for example, a virtual leasing, right? Leasing is definitely slower, but they have maybe a dozen people just moved in. People are obviously offering concessions, and we're continually working with them to do, cash flow analyses and stress tests to see at what point will they run out of capital, to service the debt. And, we'll address it then. Right now, it seems like it's an issue that won't come up for a little while. And then on the land side, for our lot development deals, which are then being sold to the national home builders, I've been on the phone with them, a couple times a week, and sales have been fairly strong so far, especially given, the market. The one thing I continually hear is the conversion rate for sales is significantly higher, meaning there's a lot less people that are just going in there just to look. If people are showing up or contacting them, they're dedicated buyers, which is pretty interesting to see.
Answer your question, Kevin?
Very interesting. Yeah, that definitely gives me more insight and perspective into how construction lenders are looking at their portfolios, which is helpful. So Ben, I appreciate that.
Yeah, listen, I would definitely expect at some point where there are going to be interest shortfalls, and at that point we would handle it, just like we would a normal course of business. We'd ask for an interest true up or a loan rebalancing. But it just hasn't happened yet. But we're definitely having those conversations just so everyone's prepared.
Kevin, I'll ask you the same question. I believe you service some of your book of loans, if not all of it. How do you suggest borrower works with their lender right now? First in general, but more specifically, if they sense any hardships around the corner, what's the best way to approach it with their lender?
Well, so we do service and asset manage all of our loans in-house to give that kind of high touch, white glove treatment that would result in the borrower's business plan, going faster or increasing that velocity. But if a borrower was experiencing hardship, I would say, ask nicely, be open and transparent, like Ben said. Coming in strong with some ridiculous ask is probably a good way to alienate the relationship. But the our borrower, that we have completely discretionary capital that's unlevered, is that if they need more time, we'll find a way to get there, so long as they're doing the best they can and they're performing well.
So I think it's safe to assume, just given who the providers of your lent capital is, there's a little more flexibility perhaps than a lender who may have bondholders or other interests they have to, exercise their fiduciary duty to. Is that accurate?
Yeah, but as Ben said, I mean, we're registered with the SEC by virtue of being a fund manager of our size. And so we owe the same fiduciary responsibility to our investors that a trust would to bondholders. So if borrower's just defaulting in order to get into special servicing to ask the question, that's a bad idea. And we also do remind borrowers, they're in the equity, they bargain for upside, we're in debt, and we bargain for downside protection. But we want to work with anyone who's experiencing real hardship.
Great.
Eli, Kevin made a really good point that I just want to echo. No one likes having something demanded of them, especially in a time like this. And when borrowers or anyone just wants reasonableness and leniency, I think it's a lot. You get what you give. So having someone call you up and say, we just heard about so-and-so program, we're not paying you this month, goodbye, it's not going to be met with leniency.
Go ahead.
Everyone wants to be asked nicely. We're all in this together, and I think, like Kevin said, if you're reasonable, you're transparent, open, and honest, you'll be met with the same.
end, and this was not a written question, but I think, while we're on this subject, does it matter perhaps what state they're in? I know California, Florida can be, 2 years to a foreclosure. Therefore, there's not much teeth to starting a foreclosure process now, perhaps, but other states can be a lot quicker, and perhaps the balance of power leverage changes in these dynamics. And, I do want to also make clear, it sounds like there's not a heck of a lot of this going on, which is encouraging to hear, but, do you guys pay attention to that piece of what state it's in, perhaps?
Eli, no one wants to use the F word right now.
Yep.
I think that, and I can't speak for Kevin, we definitely know the rules in the states in which we lend. I think that any state right now, it's going to be very hard to even get a date with the court to initiate foreclosure proceedings, just because a lot of them probably aren't there. And so that would be one difficulty, but I don't think anyone would really want to take advantage of the situation that we're currently in and try to foreclose. But even if they did, like, if, for example, you're in a deed of trust state, which sometimes is an easier state to foreclose in, I think right now it's still going to be fairly difficult just because of people being closed or there's other stuff going on.
Kevin, anything to add there, or that covers it for the most part?
Yeah, I think that covers it. I'm kind of ambivalent. I mean, if a borrower's being a good actor, we work with them. If they're being a bad actor, which we haven't, really experienced much of that, then we won't. So, like it goes back to ask nicely, be open and transparent, and talk about what the real issues are, and hopefully there's solutions other than the equity doesn't want to do anything. They just want relief from the borrower or from the lender.
Got it. Well, I appreciate you guys bearing with me during some of the, tough kind of coronavirus relief questions. I personally am pretty optimistic that we're going to turn the corner soon. So I think that's a good segue to talk about life after coronavirus and deal making and some of the more positive things and the fun parts of our industry. So I'll keep it over with you, Kevin. What does lending look like after coronavirus? Is it business as usual, or has the climate changed at all? And then how does underwriting perhaps change?
Well, I think, like we're seeing with the agencies, there's going to be, reserves that lenders are going to want, especially seeing as how, tenants have been instructed that in some cases they don't have to pay their rent and it'll be deferred. And I think some people take advantage of that situation, not just people who are actually affected, which is why there's going to be, some tightening of underwriting. I also think that there's going to be less players in the space, so less supply of that debt. So it's going to be, the strong lenders that survive and continue to flourish. But
and
as far as landscape,
Sorry, go ahead. I was just going to ask, do you underwrite the same way you always have? Is there, different sentiment towards risk, one way or the other? Is it business as usual, or has this changed the way you think about lending at all?
We've always underwritten to a granular level, so nothing on that front is going to change.
Great, got it. Sorry, I cut you off as you were adding something.
No, I was just going to say, I was talking with a board member of a very large retail restaurant chain that's public, and they were talking about how their old stores, their legacy stores or locations, have a much bigger footprint than their newer ones, and how they think those stores, which have been sucking wind the last few years, are actually going to be their best performers going forward, because they're, with social distancing, they're still going to be able to get so many tabletops in there, but further apart. And So I think that there's going to be interesting changes that, potentially are lasting.
Great. It wasn't Applebee's, was it?
No, it wasn't Applebee's.
I'm just kidding. I didn't assume it was, but it popped in my head for some reason. Ben, I'll ask you the same question. What does lending look like after coronavirus?
If you want Applebee's.
Sorry. Go ahead, Kevin.
No, I'm just kidding. I was going to say, if you want Applebee's, I'm happy to take you there for our next closing dinner.
Well, don't get there yet, because that does come up in the speed rounds. I do have a speed round question around that. So don't jump the gun. But Ben, what does lending look like after coronavirus? How does your underwriting change? You're obviously in a pretty niche space. What does your world look like?
Like Kevin said, we've always been pretty granular in our underwriting, especially with the majority of our business being construction and residential lot development. I don't know what it looks like. I think it just depends on how long we remain closed, and, do people end up not being able to afford mortgages and single family homes and need to go to rentals? I think it's a little too early for us to say, given how far out all of our projects are. I don't know. Is next month the construction prices skyrocket? Do they go down? Is there kind of a reset, especially in South Florida, for land prices? I think it's too early.
All right, too early to tell. So last question before the aforementioned speed round, and then we'll do some Q&A. And this is a chance, obviously, to plug your businesses a little bit. But I think we all want to know as well, and I'll start with you, Ben. Historically, you guys have been a construction lender, development lender, and that's, A&D, acquisition and development, and then construction as well. Are there any other products or markets you're expanding into to diversify the company?
We're pretty active in the Southeast. I think we'll remain active in the Southeast, especially as people continue to move here. I think that we have been expanding into industrial, but I don't see us changing much as to what we're doing or adding business lines. We've historically done very, very little retail and hospitality, so I don't think that this is I don't think that's going to change. I think we'll continue with the residential by and large.
Okay, Kevin, same question. When I first saw your firm, it was a pretty straightforward looking bridge lender, and I could be off on that. That's what it appeared to be to me. We met recently, and you told me about some of the other programs you've rolled out and some more you will roll out. What markets are you perhaps entering from an origination standpoint, and what new loan products can we look forward to?
So I think that we'll have a LifeCo, type product for perm financing down the road. We should launch that hopefully in 2020. But what we are doing that's a little bit different, in addition to our typical programs, which are a 3+1+1, and then more of a prepay flexibility program that's special situations, quick close, or borrowers just have a non-bankable transaction, they need more structure. So deploying on those, but we're also starting to buy notes and extend repo lines to other lenders, and so I think we'll continue to roll those programs.
Great, thanks. All right, if you guys are ready for a little fun, believe it or not, I sometimes do this in interviews with potential employees, sometimes high-level interviews as well. We're going to do a little bit of a lightning round just for some laughs. I'll start you guys off slow with some easy ones, and then we'll take it from there, and then we'll open it up and see if the crowd has anything. And I'll start with Ben and then go to Kevin and kick it back and forth. Ben, pick one or the other, Microsoft or Apple.
Microsoft.
Kevin,
Microsoft.
Kevin, I'll stay with you. Pepsi or Coke?
Coke.
Ben?
Coke.
Let me just remind you guys, speed round. Let me emphasize the word speed here a little bit. Let's kick them out. First thing that hits your mind, Buffett or Munger, Ben?
Buffett.
Warren Buffett, Charlie Munger. Buffett guy, Kevin?
Munger.
Paul or John?
Paul.
John.
Beatles or disciples?
Sorry, that was the Beatles, Paul. But you can chime in with your favorite disciple. Who's your top guy?
Anyone but Judas.
There you go. All right. You know what? I'll skip this last one and we'll go towards a little more substantial part of the speed round. What would you know? Sorry. What do you, with what you know now, what would you have done different earlier in your real estate career? And I'll start with you, Kevin.
So I always tell young people to work their tail off and to network as much as possible, to develop mentors. I think that those are really important things to develop yourself and your Rolodex.
All right.
If you can cut your teeth during a downturn, then you can be successful in this industry long term.
Great. I like that. Ben, quickly, what would you do earlier in your career with what you know now?
I think I probably would have gone to more networking events when I first got into the business, especially when I was in Miami.
All right, great. So prevailing theme seems to be networking and
I can
cut
give you
your teeth.
the full answer.
Yeah, full answer, man.
I didn't give you the full answer. What would I not do earlier in my career if I could go back and change it? I would know
what
the
would you
difference
not do?
when to keep my mouth shut.
Okay,
I would know when to keep my mouth shut.
great. Sounds like there's a good story in there somewhere. I invite you to answer it if you'd like, or we can save that for next episode. But that is very good advice. I think we all know. Ben, I'm going to kick off with you. If you hadn't gone into the business you're in now, what would you be doing?
Shit.
That's all right. We got an S-bomb. Wipe it out.
It's a good question.
This is the NC-17 webinar, so don't worry about it.
Yeah, I'm not sure.
Well, I'll answer for you, having known you a little bit. I see an attorney, perhaps. Fair guess?
Potentially. I don't know if I would have been able to do another couple years of school, and the bar seems pretty intimidating, but potentially. Maybe I would have gone back to school.
All right, Mr. Miller, what would you have done if you weren't in this business and it could have been by choice or necessity or whatever your knee-jerk reaction is?
So by necessity, I always told myself when I was starting the company that failure wasn't an option, and that if I didn't succeed, I would enlist in the Army, which gave me quite a bit of motivation to get off my butt and work my tail off.
Great, kind of like that. Good way to keep yourself hustling. Kevin, I'm going to stick with you. You alluded to it earlier. I hate the term foodie, so I won't call myself that. Maybe I'll call myself a fatty instead, because I do like eating a lot. Best closing dinner in LA.
Ooh, whatever the client wants.
Well, client says, I'm an out-of-towner, you choose. Where do you take them? What's the go-to?
Ooh, probably sugarfish, something like that.
Okay, well, in my 3 years living there, I didn't make it there, but I've heard good things. Mr. Jacobson, best closing dinner in Miami, and I will allow you to expand it into Broward or Palm Beach County. What do you got?
Miami, probably Gabbiano.
Not sure. I know
Dude, what
that
about
one
Joe's
sounds.
stone crabs?
Joe's is great, but Eli actually taught me the trick. The trick for Joe's is just go there for lunch, sit at the bar, and you're in and out.
That is a true story. There's a little takeout restaurant next to the main one that no wait, same food, cheap liquor store priced wine and beer. Yeah, trick of the trade. So, with that, we ran a little over for audience Q&A. We had about 3 or 4 questions come in as we were chatting. Some of those I wrapped into questions I asked, so most of them got answered. I will pause just for a little bit, see if anything new pops in. Otherwise, I think we're all set. Really appreciate both your time. Ben, I have your email here as your B Jacobson, JACOBSON @foremancap.com. Anybody who's interested in learning more about their lending products, Ben's really a great resource when it comes to development and can give you, sense of what rates might look like and feasibility. And then I have Kevin at Thoroughfare Capital, and that's THOROFARECAPITAL.com. And also a great resource. I'm assuming they're both can be found online with phone numbers to accompany that, but I will spare you guys that. Oh, I do see another question coming in. Leverage. This is a great question. I'm embarrassed I didn't ask it. Leverage post-virus. We talked about rates. Leverage look to be about the same levels, or do you see perhaps a de-levering and less risk taken on by the lender?
I see in most instances a little less leverage. But it all depends. I mean, we just got hit with a triple net leased Costco that's coming in to a great location in SoCal, and the borrower, while under contract at vacant industrial pricing, managed to get a 10-year lease signed with Costco. So created real value, and we'll go up higher on the leverage stack for that.
And when you say a little less, do you mean, and I'm shooting from the hip with rates, 75% to 70 or even 75 to 65, excluding the deal you mentioned?
I think it really depends on sponsor quality, capitalization of the sponsor, asset class, submarket. So, I mean, it's going to be all throughout that range.
Ben, same question to you. I know as a construction lender, you guys are typically lower on leverage anyways and fairly protected. Do you see holding those levels or perhaps de-levering just a touch on future loans?
Given where we are right now, my guess is that we end up coming down a little bit. But I also think it just depends on how strongly the economy ends up coming back and how quickly. For us, it's really about timing, because it's not always about what's happening right now. It's about what market we're delivering to.
Yeah, I think it's interesting. I'm hearing so many people back at, V-shaped recovery, or much more prolonged one. I mean, like the IMF just came out with a report today that said it is very likely this in the global economy and world since the Depression, and that's a quote from the IMF. I don't know, that it's going to be that bad. Certainly hope it's not that bad, but we'll see.
Well, I think I saw that quote, and there was a little bit of a clickbait headline element to it, and I think when I'm seeing some of these doomsday quotes, often what you parse out is that perhaps we're already in this thing. It's already going deep. We've heard V shape, so hopefully it's short-lived and there's a little bit of a rubber band snapback. So it's very possible it gets deep and painful, but hopefully a quick rebound. So I did see that. I appreciate you mentioning that. So I'd be remiss if I didn't, give myself an opportunity to speak and ask if you guys had any questions for me before we sign off.
None for me.
Yeah,
All
keep
right,
building that
cool.
business. We want to see a product coming out of it, and we're excited to
great.
continue growing the relationship.
Mr. Paul McCartney over there, any questions you have? Anything we missed?
Oh man, I think we pretty much covered it. We do have a question that just came in. Making any e-innovations or working more with e-recording? Does that mean anything to anybody?
If they're talking about like recording docs or things like that.
Oh, okay. Is that what? Okay, got it.
One of the things that we've had to adjust to is virtual notaries, which is literally like FaceTiming a notary and then filling out a form and doing those types of e-signatures. So that's been interesting. A lot of the other things, unless you're in really small, especially in the South, a lot of like small counties that aren't online, those are proven to be a challenge and we're figuring it out. But with everything out, most other places, everything's electronic at this point anyway.
Awesome. Good question. I hadn't even thought about that. Opportunity for somebody.
Yeah, I was just going to say same response. I think the little counties are going to be the ones who have trouble. But the major ones, and now that toothpaste is out of the tube, I don't think it's going back in. I know it was done out of necessity, but I don't think it's going to go back to the way it was.
Are there any particular providers you guys are using?
As far as title?
Yeah, but e-recording. The Michael J.U. Watkins wants to name drop somebody. I don't know of any e-recording companies out there that are doing this. So if anybody knows something there, they could be the future. Definitely share it with the group because I'm new to this.
So I believe it's county by county on whether or not they can electronically record. All the major metros can, to my knowledge, and all the major title companies are able to work with that.
Got it. Cool, man. That's all I got, Eli.
Well, thanks everybody. Really appreciate. We stayed under an hour, which is a good accomplishment in my book. And I encourage any of the attendees to give us some feedback. Tell us what we're not doing right. Tell us who you'd like to have on the show. Tell us how to improve. Obviously, we're learning how to do the webinar radio game in our new coronavirus lives. Typically, we're out there building businesses. So feedback always welcome. We should have something for you every Wednesday, and we'll respond based on that feedback. So in parting, I just want to thank Ben and Kevin and Paul for all your help, and everybody for humoring us and giving us an hour of your time. And hopefully it was beneficial, and we will provide some more down the road. So thank you all very much.
Thanks, Dave. Thanks, guys.
Everyone take care. Stay safe.
Be safe, guys.